Hello, good morning. Jayaram here from Almus Market Morning. The year seems to be ending with the continued bullishness in stocks. Yesterday, S&P 500 made a new high, of course, amid thin market conditions. Also, market took heart from the fact that many of the treatments for the Omicron is giving good immunity, and while the cases are increasing, the seriousness is much lesser. Also, a report from MasterCard says that retail sales during the holiday period was up 8.5%. So markets had good reason to buy more stocks, and everybody was happy to be in the existing trend. Mostly the existing trends have continued, except that the dollar has kind of topping out, one could say, but it's too early to say. We can only confirm when we are in a normal market next month. Dollar index came down to around 96. GBP recovered with higher yield. Also, most of the bad news being discounted and downside looking solid. While Euro also recovered with some higher yields, as well as European LNG prices coming down further. So these are actually factors that, and dollar yen pushing towards 115 again. It's a real indication of a benign risk environment. But do not read too much into these trends which are in these times, but in any case, even in the larger picture, dollar index does look to me as if we have an intermediary top in place. We have another 2 days to go for 2-3 days to go for the year end, and conditions are getting thinner, and we might either have very low volatility or very high volatility if there is any news. On the USD INR, definitely short-term charts look oversold. And also we are in a region where RBI would be expected to support and not give room for further appreciation in the rupee. The factors that they should be keeping in mind probably are, again, the higher oil prices, Brent pushing towards 79, then trade deficit, which are on the higher side for last 3 months. We will have the number for December the next week. And also, we are still overvalued on RER terms. And market getting one-sided in these thin conditions, if RBI doesn't support, then you will have unusually big movements, which they would like to avoid. In any case, the last few days selling was mostly driven by exporters who had to hedge before December, and that may be tapering off in the coming sessions. And we are getting good support in and around 75, which I think should eventually lead to a correction to 75.40 or 50. That's all. Have a nice day.
Thanks, JK. So there are receding worries on Omicron now, and that resulted into a basically increase in crude oil prices, short-dated treasury yield. So now crude oil contracts are trading at almost 1 month high. Brent crude oil is trading at 78.80, and it looks like it will be touching 80 maybe during this week itself. Short-dated treasury yield yesterday jumped, 2-year yield jumped by 6 basis points, and now currently dealing at 75 basis, which is almost 22 months high. Whereas a 10-year GSEC yield is not changed at all. 10-year GSEC yield is, or 10-year treasury yield is dealing at 1.48%. Now, after this action of 2 years, Fed Fund futures are started pricing 25 basis rate hike in its May meeting. So now it's the way it looks like, it's a certain that in the May meeting, there would be a 25 basis rate hike. Whereas now there's an increased probability, that a 50% probability that rate hike might be there in March month itself, which is happening first time in last this year after the rate actions being spoken about. India, the markets are much calmer. Bond yields are dealing in a narrow range. Now 10-year G-Sec yield is likely to open at 647 today and will deal in the range of 645 to 650, likely to deal in the range of 645 to 650 till the month end or this calendar year. Thank you. Have a nice day.